All right, let's take a broader look at the tech sector. Joining us to discuss investor appetite for European tech stocks is Matt Gehl, co-head of EMEA Technology Investment Banking at JPMorgan. Matt, so great to speak to you. Of course, we're going to have to juxtapose the U.S. story, all of this big AI spend coming from the hyperscalers, and this euphoria that we're seeing in the market very much once again reflected in the month of May versus Europe. Europe doesn't have a big player when it comes to AI just yet. Are we still seeing a whole lot of optimism on this side of the pond as well? Obviously, it's not reflected in the broader indices as much, but is the sort of excitement on par?
I wouldn't say it's quite on par because, as you point out, we don't have an NVIDIA, we don't have one of the hyperscalers, but we do have a number of the companies that are putting the backbone together, whether it be some of the chip companies, whether it be some of the software companies that are benefiting from that, whether it be a company like ARM, which while listed in the US still has a nexus here in Cambridge. So I think there's a building optimism around what AI can do for the broader sector in Europe. We just don't have the standout magnificent 7 names. We don't have NVIDIA powering ahead 28%. So it's cascading out just to a slightly lesser effect.
You know what's interesting, though, is Karen, my colleague, who usually does this show, she's off today, so I'm filling in. She was at Viva Tech in Paris last week, and she told us that the rock stars at this event, those were the young founders, the AI founders. Everyone wanted to go and talk to them, to snap a photo with them. And seemingly, any company with .ai at the end of it is commanding valuations, in excess of, or an extra $1 billion. Are investors, are they increasingly becoming somewhat more discerning here, or is it still sort of indiscriminate throwing of money at anything AI related?
No, I think it's really changed quite a bit. If we think back last year, it was probably the time when the consensus started to build that AI was going to benefit almost every company, whether you were going to have an increasing top line story or you were going to have cost saves, whatever it may be, AI was good for all. I think as we come out of the conference season, we just had 2 of our conferences the last 2 weeks, there's really much more of a split. There's going to be the clear AI winners. Increasingly, there's a concern that AI might actually divert some spend from some legacy companies or some software companies that are more application focused. And so I think investors are asking a lot more tough questions. If you're a pure play LLM that's got a leadership position, if you've got a very differentiated AI technology, yes, investors are still piling in, knocking on the door of those founders. Not everyone's benefiting to the same degree as maybe 3 or 6 months ago.
And maybe that's a good thing, because the market is becoming somewhat more choosy about where to put the money. We don't want to go back to the heady days of maybe 2021 when every company out there was sort of bombarded with money. AI and the efficiency gains and the revenue increase or the decline in costs, it's becoming somewhat more quantifiable. I'm taking a look at Klarna numbers, a really interesting name in your area as well. AI helping operating expenses coming down by 11%. Do you want to see more of the sort of, the proof in the pudding? Do you want to see more of the sort of the actual hard numbers on what AI can do?
Yeah, I think investors are coming to the point where you can't just have a couple of flashy slides or a couple of big headlines. We want to see what's actually doing the top line. You see that with NVIDIA, you see that with Amazon, the hyperscalers. They're posting blowout numbers in many cases driven by AI. If you're just talking about some high-level benefits and you're not seeing it flash through the numbers, investors are starting to say, well, is it really a benefit? Is it something you're just talking about, or am I going to see it in the bottom line? If I'm not seeing it at the bottom line, maybe it's actually becoming a risk. And I think we've seen that over the earnings season. Some companies actually being harshly punished for fairly minor misses. We're really causing a question to be asked. Is AI actually a benefit, or is it a threat for your business? And I think that's going to continue to play out through earnings over the next couple of quarters.
Yeah, I mean, you just come from the Global Technology, Media and Communications Conference, right? Both stateside as well as this side. I mean, what are you seeing there? And we speak about those small players perhaps in this space as well, the up-and-comers, so to speak. Are they looking to head into that IPO market, or is this just a space where you rather get bought up and your processes then follow through onto bigger entities?
Yeah, I think everyone at the end of the day wants to have a pathway to an IPO, but I think the days of saying the end game is the IPO have really gone away in the tech space. And these companies have such access to capital in the private domain that they don't need to rush to get public. A lot of these AI companies are only a couple of years old as well, and so there's not necessarily the need to provide the liquidity to employees and to really show an exit to the VCs immediately. So we don't see the same rush to get out from some of the newer AI companies. But on the IPO point, we are seeing more interest in starting to get ready for an IPO than we've seen any time really since November of 21. Right now it's the bigger companies, it's the companies that have scale, that have profitability or near profitability, and have a real ironclad AI story are going to market. When those companies are coming public and being successful, they're outperforming, investors are making money, the next wave of IPO candidates is starting to do the preparatory work. So we're feeling much more encouraged about IPOs in tech than any time in over 2.5 years.
Yeah. If you were, let's say, an Elon Musk investor, and I say Elon Musk investor because you follow a lot of his rhetoric, maybe you follow a lot of the stocks he has as well. If that's the type of investor a person is, and they see him garner $6 billion for XAI when he said he would like to actually put that infrastructure into Tesla and is not doing it in Tesla because it's got this squirm and squabble and this issue, of course, on that pay situation. Mm-hmm. What does that make you think as an investor of even Tesla or even just the Elon Musk ecosystem? Do you begin to worry that you're not going to get the benefits of something like AI in the stocks that you would have hoped for example? Or is it just because, well, it's broad-based? There's still a lot that could actually be thrown at each stock.
I think anything that happens with Elon Musk is very particular to him. So I think when he chooses to do something, you can't necessarily extrapolate that out for the broader tech space. But I think you bring up a really important point. Is AI starting to really suck some of the oxygen out of the room for somebody that doesn't have a true AI story? And that's why you see so many companies focusing so much of their R&D resource, so much of their communication resource on what their AI story. Even if you're not necessarily clear what that AI story would be, you need to formulate it, tell it to investors, and then show it on the bottom line, or investors are going to look elsewhere, putting their capital to work.
What about sponsor-led deals that are coming to the market? And obviously, many of these big PE players, they're holding on to their assets much longer than they wanted to, in part because valuation isn't where they wanted it to be, especially if they're fundraising at the same time. Are we seeing more of these deals and GPs realizing some gains here for their LPs?
Yeah, I think that's probably the most encouraging part of the tech market in the last 6 months. IPOs are still fairly nascent. Sponsored deals have ramped up materially. The debt markets are very, very active right now. Sponsors are needing to deploy new capital. They've raised very large funds, didn't put a whole lot to work over the last 2 years, and so there's a desire to buy companies. And we've started to see the valuation mismatch over the last 2 years go away. So big ramp in deals. Right now it's mostly sponsors buying their other sponsors' companies. We haven't necessarily seen the strategics ramp up in M&A, but again, those discussions are starting to ramp as well. So the M&A market, again, is in a very, very buoyant position, but is primarily sponsor-led for the first 6 months.
Yeah, how do you feel about regulation in this space? Because that feels like it's lagging somewhat as well in this, right? Yes, you have Europe trying to sign in their AI regulation here, but it feels as though something horrible first has to happen, particularly on the AI side, before you get this drastic move to try and say, well, okay, we need to regulate this space a whole lot more, particularly stateside. That's what you're seeing. Do you feel like that is needed, or would that curtail the kind of growth you see in AI infrastructure and globally as well?
No, I think it's a really interesting debate. I mean, you talk most of the companies in AI, they want some regulation, but they want lighter regulation than some of the governments are talking to. Because if you're regulating, you're often looking at what happened in the past. In an industry moving this quickly, if you start to put handcuffs on companies because of what happened historically, there's a real concern you're going to let other companies in other countries that don't have those regulations leap ahead. And that's a big concern in Europe. If we don't have the same level playing field than you have in the US or in China, can we still breed the same type of AI companies here as everywhere else?
And is that the main reason that Europe is not producing the big AI company that's rivaling some of the others in the US? Or are there other reasons?
I think there's a host of reasons that have been plaguing the European tech industry for a long time, and it's come a long way. But we don't have a 40-year history of companies that have gone public, the founders have done it, they're on their second or third or fourth entity. We don't have the same levels of capital that are there to back these companies. But if you just look at some of the AI startups that are being funded, the amount of money going into the likes of a Mistral or an Aleph here in Europe, we didn't see that with the hyperscalers. There isn't a hyperscaler here. We didn't see that with the big SaaS companies. So in AI, I think Europe's in a much better position than it has been in past technology revolutions, but it's still behind the US and China.